Well, this is Current Yield, the Grant's Interest Rate Observer of the Air, and welcome, ladies and gentlemen. It's a pleasure to be here, as always. I am Jim Grant, by the way, and with us today is Michelle Leader, who is the first word and the last word in the fine print that, according to authorities at Harvard University, you no longer have to read. I'm paraphrasing, and we'll get around to this Harvard Business Review story in a moment. But with me to my left is Eric Whitehead, who is our engineer. He's at the control panel, and the great Evan Lorenz is sitting diagonally across from me in this glass table, and directly ahead of me is Michelle. So Michelle, welcome.
Thanks for having me.
You are entirely welcome. Well, it's our pleasure. Okay, so to begin with, Evan, let us get this out of the way, this Harvard Business Review piece, which I read on our deadline on Tuesday, and I thought I had read everything. Indeed, I thought I had written everything, but no, I had not read this, but we did indeed paraphrase it. Please tell our listeners, you can hold this thing up so they can see it as well. Yeah, so you know we're not making this up. Here it is. All right. See? Yeah, it's a thing. Why we need to update financial reporting for the digital era is the headline. All right, Evan, tell us what it says.
It basically says financial accounting is not kind of important anymore. And in fact, if you're one of the accountants in a company, you're likely not going to be invited to the company party or even to the planning session or even to any...
Well, that has been going on for a long time. That's just a social problem, right, with the accountants. It's nothing to do with substance.
Yeah, let's see. This is the CFOs of Silicon Valley companies. They consider the calculation of GAAP-based profitability be more of a hindrance and a distraction to their internal resource allocation decisions. One CFO commented that they now avoid inviting company accountants to the strategy meetings, while another said the CPA certification is considered a disqualification for a top finance position.
Well, I would say that it's a hindrance for the stock price as much as for the planning process. That's my own instinct in the matter. Now, Eric Whitehead was in the day, he was an accountant, and I didn't recall him being invited to that many parties, right? No. So it's only part professional. Michelle, do you have any comment on this Harvard Business Review, I'm going to say, outrage?
I think it is, Evan just told me about this for the first time, and, I guess it shouldn't be surprising, but yet it still is. You certainly see some of this in, the filings that I'm reading where companies are just making up metrics. So is that really an extension of, if the metrics don't matter, you can just make them up?
Well, for the benefit of our listeners who are not familiar with Michelle's work, she has spoken at a grants conference. I'm not going to say that's your career highlight. It's just, it's one of those things. I will say that teaching your dog Kumara to actually vet SEC filings might well be a career highlight.
That is definitely
Michelle
career highlight.
Michelle has spent many, many years studying SEC filings, is very familiar with the tricks of the trade and what an investor ought to be on guard for. And could you help us get into this topic of defensive reading?
Yeah, I think, as with anything, read the fine print. I think very few of us actually do read the fine print. Even look at, when you go onto a new website and you look at terms and conditions, how many of us actually...
scroll right through that stuff, right?
Exactly. Apple does a new update on your iPhone. I think they just pushed a new software update last week. And, in order to, you have to agree to their terms and conditions. But if you actually were to scroll through them, it would be quite cumbersome.
I don't read the aspirin labels either. You open an aspirin bottle and there's this essay.
Yeah.
I read most of it, but
True. Look, it's, the stuff is written by lawyers who are getting paid basically
by the word,
yeah. Much like Dickens got paid by the word, back in the day.
Yeah.
They're getting paid by the word.
Well, let's get down to cases, Michelle. So you have read these things for a living, all right? So you get a new filing, and let's say it doesn't come in at some suspicious hour, like Friday at 9:30 p.m., right? So you can kind of expect that it's more or less orthodox. How do you read it? Do you read it from the back to the front? Do you read the footnotes first? Do you read, how do you read it?
I think it just depends. If we're talking about, like, let's say a 10K or a 10Q, right, that's, it's a much more systematic approach, right? Because the 10Ks have sort of these chapters, if you will. And so I'll look through, particular sections. I like to look at the litigation to see if there's any new significant litigation. I like to look at the risk factors. Risk factors are very important. So those are sort of the areas. And of course, the footnotes, that would be in a more traditional, like in a 10K. If we're talking about a 10Q or an 8K, it depends. Obviously the Friday night dump, which, a term that I'd like to think I invented. I invented it. Let's just call it right here.
Yeah. Evan, you agree?
Yeah, I never heard of it
Eric?
or her.
Yeah.
There you go.
All right.
So Friday night dump. And, basically after 4 p.m. on a Friday afternoon, once the markets close, there is another 90 minutes while the SEC remains open, where the SEC remains open. And during that time, that's when companies tend to take out the trash, so to speak. And so you see a lot of unusual 8Ks there, whether it's a CFO being shown the door or, an audit chief.
An 8K form is for a special event?
The definition is actually is supposed to be, an event.
Of consequence, right?
Yeah. I mean, I think that most of us tend to think of it as a material event, but of course, materiality is in the eye of the beholder.
So 10K, of course, is the annual
report.
Right?
The 10Q is the quarterly report.
Right. And 8K is the surprise.
Is a surprise, yeah. I mean, usually we often associate that with earnings, right? Like a company will file its earnings and they will do that as an 8K. They'll include the earnings press release there. But an 8K can be used for all sorts of other things, as well. And so whether it's material or not, usually that's sort of how we think of it. It's something that the company has to tell its shareholders that they think it's important enough to tell
Michelle,
shareholders.
in all your reading, and all the years you've been reading these things, what trends have you noticed? For example, has Gap been, not entirely scrapped, has Gap been subject to its own bear market? Is the Bespoke financial metric, is that in a bull market? And if these things are true, what does it mean for investors?
I definitely see a lot of the Bespoke, financial metric. I mean, I think it was about a year or 2 years ago, I guess, Twitter started using a new metric.
Which was that?
And it was called daily active usage. Now, there is a metric called monthly, one of the common metrics is monthly active users. And then there's also the corresponding daily active users. But usage would imply something totally different. And I think that was just kind of tweaked in a way to suit Twitter's numbers, where you have a number of people like Evan, tweeting very actively throughout the day.
Wait. Evan does what?
I'm being framed. It's a doppelganger.
Tweeting actively throughout the day.
All right, Michelle, why don't you proceed? Evan, we'll talk later about this. Eric, do you have anything to say? We're going to pause right here just for one split second before we get around to Evan. Well, constant listeners will know what this means right here. That's the away travel sound. Away travel makes luggage, and not just any kind of luggage. It uses high-quality materials while offering you a much lower price compared to other brands by cutting out the middleman and selling directly to you. So you can choose from a variety of colors and 4 sizes: the carry-on, the bigger carry-on, the medium, or the large. That's when you want to go to China. Hey, my wife is in China. Patricia Kavanaugh, MD, is in China, and that's away, right? That's half a world away, so hurry home, Patricia. As I was saying, all these suitcases are made with premium German polycarbonate, unrivaled in strength and impact resistance, and very lightweight. The interior features a patent-pending compression system, helpful for overpackers. TSA-approved combination locking to the top of the bag to prevent theft. Removable, washable laundry bags keep dirty clothes separate from the clean ones. Lifetime warranty, 100-day trial. Live with it, vibe with it. Travel with it. If at any point you decide it's not for you, return it for a full refund, no questions asked. Free shipping on any away order within the lower 48 states. Carry-on sizes that are compliant with all major U.S. airlines while maximizing the output you can pack. Now, the special offer is as follows. For $20 off a suitcase, visit awaytravel.com/grantspod and use promotion code grantspod during checkout. That's awaytravel.com/grantspod and use promotion code GrantsPod during checkout. That, ladies and gentlemen, would be your darn call to action. So act. All right, Evan, it's okay. You can have another job too. I know we don't pay quite enough here, so it's fine.
Twitter doesn't pay very much either.
They don't pay by the word?
Unthankfully, no.
Boy, you know what? Donald Trump would be really rich. Anywho, so
Evan, how often do you tweet?
Now,
how many
mind.
tweets do you do in a typical day? No, seriously, how many do you do?
Maybe 4 or 5.
Oh, for
really?
Christ's
That's
sake.
it?
That's it?
Which I'm going to admit to, yes.
Okay, so
Michelle,
there are some people,
what were we talking about of substance?
we were talking about daily active usage. So there are some people on Twitter who tweet quite a lot, like whether, I don't know what that quite a lot number is, 10,
4 or
20,
5.
4 or 5, sure.
Then there's presidential level.
And then there's, when there are times that I'm tweeting 10 times a day, for example.
Does no one have a real job? Eric, do you tweet? Eric is saying, yeah, I tweet fine. But tweets in North Korean. Anyway.
If you're tweeting actively, let's say, and there are plenty of people who are tweeting actively, that is usage,
right?
As opposed to a user. That's Michelle being
so what
a
Twitter,
singular.
right? What Twitter was measuring was the obsessive use of its service by obsessive people, right?
By a smaller number of people.
Yes, by that, shall we call them a cohort?
Yes, we can call them that.
Yeah.
Maybe we can come up with another name.
Yeah, I bet we can a little later. All right. So that's one bespoke metric.
Yeah.
Can you think of another?
I'm trying to, there are lots of other.
Oh, we work at one, right, Evan? What was that?
Community adjusted EBITDA,
Yeah,
which, if I remember correctly, is adjusted EBITDA.
Yeah.
Yeah. I've seen all sorts of adjusted EBITDA. I mean,
And why does the SEC let people get away with that?
because I think you'd
You
have
don't
to
work
ask
there.
some people down in
You don't
DC
work-
about that. And I think that you're seeing that, quite frankly, more. I mean, right? There's an anti-regulatory environment right now in Washington. Certainly the chairman of the SEC has given plentiful speeches about this, about the anti-regulatory environment and how it's, he wants to free up these companies to do this sort of thing.
Is this a trend where you're seeing the SEC enforce stuff less and less? We recently wrote about a company who the SEC had correspondence with, and one of the things the SEC said, it would be very nice if you tell us what your organic growth is. And the company basically said, well, we're not going to. And the SEC seemed to take that as okay. Are you seeing the SEC being less, I guess, watchful?
I don't think that they're being less watchful, and I've certainly seen examples of that under the prior administration. I haven't really quantified it like that, but I think that you're seeing companies do sorts of things like they'll put in form of agreements. Like I was looking at a company the other day, for example, and instead of spelling out what options they were giving to their CFO, they just basically included a form of agreement, which is basically like a legal Zoom document that just is fill in the blank. Now, I would argue that if the SEC was actually paying attention to that, they should actually disclose what this person is getting, what the vesting schedule is, and so on. But I don't know that that's necessarily going to happen. So I will say that that's one thing I've noticed is more of these form of agreements that are non-specific and kind of vague. And I haven't seen
it is a literal
enforcement.
ticking of a box, right? There's no substance in it.
There's no substance. I mean, quite frankly, it's like, why did they even include it, right? Like you're disclosing something, but you're not disclosing something.
Now, Michelle, is there some particular industry or part of some particular West Coast state, say near San Francisco, that might be especially egregious about these things?
California?
Well, this was the topic of the Harvard Business Review story, right? It was the authors interviewed an undisclosed number, but evidently a quorum of Silicon Valley CFOs, right?
A fill-in-your-blank number of CFOs, yes.
It was like a Zoom thing. The critics don't even come out and tell you what's going on.
I mean, you could definitely see this sort of attitude where they feel that they don't have to, the GAAP rules are boring. It's like we have the new metric and the new paradigm.
They're not associating GAAP rules with older people, are they? Because that would be a form of ageism, which I think even today in this environment is under sanction of heavy federal penalty.
Yes, even today.
Aha. All right. Who said ageism? So, Michelle, of what consequence are these trends? I mean, does it actually matter? Or are people just stripping away the veneer of what had been a formalistic system and coming up with something that, in their opinion, at least, and perhaps in the opinion of the market, is a better one?
Well, I mean, I think that, perhaps it didn't matter when everything was going up, up, up. And, it didn't seem to matter that much if companies were playing fast and loose with their metrics or, defining, something in a new and unique way. But now, that there's been, I hate to use the C word, but that there's been some downward movement in some of these stocks. I think that, people are paying closer attention to this.
What do corrections correct?
Is this a knock-knock joke?
No.
Oh.
Well, maybe one of the things that corrections correct is the lack and the sloth and the fizziness. Yeah, or the evasiveness, shall we call it, of financial documents. Is that possible?
Yes,
now, did you
absolutely.
notice, Michelle, when you were watching after prior correction interludes, did you notice a stiffening up of enforcement? Did you notice a new rigor in reporting? Do corrections induce, or bear markets induce, a kind of return to older standards, or no? Or has it just been one long slide down in reporting quality?
No, I mean, I think that there has been certainly, when I think back to sort of, 2008 2007, 2008, there was certainly, the new regulations and then some of the additional disclosure requirements of that. Pretty soon people forget about that. I mean, Evan and I were speaking over lunch about this, about how the graph only goes back, 5 years, were you saying?
It's like a lot of VAR models, which banks use to actually model risk, only go back 7 years at most, which means a lot of the VAR models no longer include a recession.
Right. There's a lot of present-mindedness on Wall Street generally. I mean, if financial history paid better, I suppose it'd be more financial historians. It's kind of a sore point around here, Michelle.
Yeah.
Whatever. It's time for a word from our sponsor. We have two today, ladies and gentlemen. We have a sponsor called Fin, and Fin is all you need if what you want is to be organized. Once upon a time, way back when, everyone had a personal assistant, and around here, that office is Eric Whitehead does this as well as many other things. He's the engineer, sound tech. He's helps us. We're moving to 233 Broadway, where this publication started 35 years ago. That move is slated for later next year. He runs the conferences. He handles all the administrative details, and he is an assistant in a way. That's one of the things he does. So say you don't have Eric, right? Eric, it's possible to imagine that. No, Eric says not. But let's try. Imagine without. What do you do? Well, what you do is Fin. Fin is a combination of AI and human activity to help you organize your stuff, your time. So you won't look at your calendar first thing in the morning and freak. So you don't need to spend your time recruiting, training, and managing an assistant. Fin can do it all. Schedule meetings with coworkers or clients, answer calls, handle travel plans for your business trips, find and use book service providers to fix things around the office. Or just call Eric. Anyway, prospect new business opportunities. Fin does everything a great assistant can without the cost. Without the cost, Eric. Never mind. And commitment of a full-time hire. And if you're someone who doesn't have 40 hours of work every week, you only pay for what you use. Fin is available 24/7, 365 days a year, never calling in sick, never traveling, never going on vacation. So Fin has saved me 10 plus hours per week. And I know Fin will help you be more productive so you can grow your business. That's why I've arranged for you to all try Fin free. Just use my link, fin.com/grant. That's fin.com/grant to try Fin for free. fin.com/grant.
Is there an example maybe from 2 or 3 years ago where you saw something in the fine print that the market didn't care about and it suddenly became important later?
Wow, there's a lot of examples of that. It's hard. I think right now what you're seeing is suddenly coming to fruition, right? Something that you saw a couple of years ago is suddenly people are, paying attention to. If you look at Tesla's filings, for example, seeing some of the metrics that they've used there and some of the disclosures definitely coming into play.
Speaking of Tesla, it seemed like Elon Musk was to the wall with the SEC, and then at the end, the SEC let him off with a small slap on the wrist and a small fine. Is that kind of like an avatar for how the regulators are approaching the market today?
Yeah, it's hard. I know some guys who work at the SEC. I don't mean to say guys. There are some people who work at the SEC. I think that they're as committed to their mission as ever before. But I think, at the top, there's definitely a changing tide, if you will, where, perhaps, they don't want to do that sort of thing.
Tone at the top is something that we look at in companies to see how they're leading the organizations that they run. What is the tone of the top at the SEC today?
Well, I think it's, it's like what you hear from the administration. I think there's, definitely an anti-regulatory bent. You keep hearing about, one of the little things that just kind of ticks me off is that, talk about Main Street as if public companies are sort of like Bob's shoe store, down, that's eking out a living, but they're publicly traded companies. And I think that, if you ask the public, if you go to the market and ask for money to fund your business, then you have a certain responsibility.
Michelle, what is the tone in the middle of the SEC? People you talk to, is there a morale problem?
Well, I don't know if I want to go quite that far.
They still get paid, right?
They're still getting paid.
I'm kind of rooting a little bit for the administration on this. I think that there ought not to be a suffocating regulatory control over things. But having said that, I do think that it would be better if companies would adhere to a standard set of financial metrics and not try to make stuff up. Making stuff up is not what I identify with Adam Smith personally.
Look, I think you can make an argument that, a company, GAAP, of course, being the overall framework, that you have perhaps a bank is counting its money differently than Facebook would be. But in the end, you need to have sort of that common language, Esperanto or whatever it is that, kind of,
Latin.
Works. Yes.
Thank you for being with us today. Evan, I think it's time to go back and tweet. Michelle, Leader, thank you for being with us.